question on the energy front. If you could expand a little bit on why, when you see, I guess the relationship between the gold, the energy, and the industrials, and why all rising simultaneously. Is it a similar methodology for energy stocks that you see, Chris?
It's fairly similar. I mean, we saw energy have a huge run up just for the 2008. Just looking at this chart, it's more or less at a pretty major resistance area. Obviously, we have wars going on, all kinds of things. I think energy has a potential, depending what unfolds overseas. There could still be another big push up in energy here. But the fact that they're all frothy and highly valued just generally tells us that we've got all kinds of chaos going on. And energy stocks are usually kind of people move into them expecting chaos. They're expecting bigger wars, all kinds of bad things. And of course, when things fall apart, it becomes fuel, guns, food, precious metals. I mean, things become very valuable very quickly. And so usually during really frustrating and difficult economic times, when people get nervous, energy stuff becomes very powerful or highly valued. So it's just up at a resistance level. And if we take a look at industrials, it's kind of a different scenario. This is more so just the mindset of business owners not realizing we're at some type of major cycle high. But industrials are performing exceptionally well. They just keep pushing to new all-time highs, and everybody's been upgrading and buying, and factory warehouse workers, they don't know the bigger pictures and cycles at play. And maybe they're right. Maybe the market wants to go higher. Maybe it will.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly Varden Silver has been busy expanding their high-grade silver deposit in the Triangle. And they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
Overall, everything is lining up. Like when we go back and look at this yellow chart in the background, which is the economic cycle, we're already seeing unemployment rate starting to creep up. It's already crossed the 200-day moving average, which every time it's done this, we've fallen into some type of recession going way back like 50, 60 years. We've had some type of big market correction. Unemployment is going up. We're seeing government jobs openings are skyrocketing. It's almost like the government's trying to create jobs and trying to just get people working. All kinds of things. We're seeing people have run out of money. I mean, there's a couple of really interesting charts here of this one here shows government's jobs as a percentage of overall jobs. Every time we see the government start to create a whole bunch of jobs, we go into some type of fairly big recession. The other thing is we've just crossed over into unemployment, full-time people finally getting laid off, right? I mean, for a while you couldn't hire anybody. Nobody wanted to work. They all wanted to work from home. And all the contract workers have been starting to see hours get cut. And now we're actually seeing full-time employees being like, hey, business is actually slowing. A lot of businesses are struggling a lot. And so people are starting to lose their jobs. And, we crossed over the point from COVID where we had tons in America. There was excess savings in accounts. Now we're minus. So people have burnt through their savings. Inflation is making everything expensive. So the tide is changing. And I always like to look at the stock market like a rising or falling tide, which was one of your questions. And the best way to view this is really just looking at the weekly chart of the SP 500. And a good way to look at this is really I'll just zoom into the more recent price action this is right after COVID. The key here is to identify when the market is trending up through price action, through money flows, through sentiment, through where money is flowing to different various assets. Are they moving to risk on or are they moving to risk off assets? We want to know when the tide is going up. That's when you want to be an investor and you want to hold stocks. When that shifts, you do not want to be holding stocks. You want to move somewhere else. You might want to move to gold. You might want to move to bonds or the US dollar index. 2022 was the stock market pulled back about 25%. The US dollar ETF rallied about 18%, which we were long. So you just have to move. You just step to a different asset that benefits from weakness in the equities markets. And we've been in a long investor signal for a while in the market. Well, the market internals right now, Jay, are breaking down. Behind the scenes, this scenario we have is exactly the same as this scenario over here. Mm-hmm. So I believe we're very close to like going over the cliff and starting another bear market. And then the question is how big? Is it just a 2022 pullback, or is it an actual like financial reset of some sort? Who knows? But the scenario, we're in a very unique point here where by the end of this year, I think we're going to know for sure if we are in a major bear market correction or not. But that's the way I like to look at it. Is first of all, you need to know if the tide is going up, you want to own equities, just like the ocean. Rising tide lifts all boats. And then on top of that, I like to play shorter term moves in the market to take advantage of these swings as a bit more of an active investor. But understanding when we're in a bullish or bearish environment is a game changer. When you can step aside and move to cash or move into something that moves up in value while the stock market is figuring itself out, you can double or triple your annual returns just because you're moving out of something going down and you're holding value or earning daily or monthly interest, still growing your account, and then you hop back onto the market once it turns around. So that's like the high level view, is just understand the market and the stages. And I think you and I actually talked about the market stages the last time you and I spoke, which there's 4 stages to the stock market. And right now, the stock market is in this stage 3 topping phase. And without getting too much into details, the NASDAQ and SP 500 have been hitting all-time highs. So people will be like, well, it doesn't look like this. But the reality is the market blew off and it's in this complacency, this pause. And if we were to scratch out the large cap stocks, the weighting of them, we can look at RSP symbol and IWM, which is the small caps, and IWC, which are the micro caps. And if we just look at this price action, we are in what I consider a stage 3 topping phase. And this is where the market had a blow off move. And now we're in this complacency move. And I believe we're eventually going to go off a cliff and actually probably retest the COVID lows. That's just kind of a big picture view of where we're at. But this little pop that we've had, it happened in small cap stocks. It happened in small cap stocks right just before the 2022 bear market. It also happened just before the 2008 sell-off. So there's so many layers to this without getting into crazy details that everything is lining up that like we are about to have a pretty big reset, and people need to know how to protect their capital and move, to safety, because this could be very devastating for people near retirement or retired.